Dear students and working accountants, welcome to my Expert Tally Prime YouTube channel. Today in this video, we are going to discuss about the very important topic, bank reconciliation statement. So before entering into the topic, a request to you, everyone visiting to my channel, please don't forget to subscribe to my channel and click the bell icon near the subscribe button and select all. You'll get notification for all the videos which I upload in my channel, and also share my channel with all others. And another important thing is watch every video till the end. Don't skip in the middle. If you skip in the middle, so it will you will understand the topic up to that point only. The balanced topic or subject you cannot understand, you will not know. It will be like half knowledge. It is waste of time, nothing more than that. So watch till the end. If necessary, watch more number of times. You will get a good knowledge. And also you work out the example I showed in this video or any other examples. You take some own examples. You practice the examples or problems in the tally frame many number of times, so you will get expert knowledge. And also after completing, after watching the video till the end, please like the video if the video is good. Okay, now we will enter into the topic. I am sharing the screen, you see here. So in this case, actually, what is meant by bank reconciliation statement? So here, so a business will have many transactions, that is all cash transactions, purchase sales, cash transactions, receipt payments, everything. In addition to that, they will, every business will have many 1 minute. So we will have many transactions with the bank. So in the case of all new power transactions, the bank is concerned with the bank account in our books as well as bank our account in the bank. That's this the transaction between the company and the bank. This is related to the bank account statement. It means so whenever we are receiving the checks from our debtors, others from our customers, whenever we receive the checks or DDs or online payments, anything, we will enter the entry. In the entry, we will debit the bank account. We will debit the bank account. That means we will deposit the checks which we receive from the customers. We will deposit them into the bank immediately. That is why when I'm making the entry, we make a receipt entry. In the receipt entry, see, in the receipt entry, we will credit the party from here, from where we are receiving. We will credit the party and we will debit the cash if we receive and debiting cash. So that we debit the bank account. So whenever we receive money, that is we receive checks or DD or anything through bank from our customers, we will debit the bank account. That means just the now our deposits. So we receive the bank check, we will deposit in the bank. Receive DD, we will deposit in the bank. If you sometimes you receive the online payments directly, it will be debited to the bank. So all your will be debited to the bank. And then when you are making payments, that is only from the two bank. That means when you issue a check or when you make payment through NEFT or RTGS or any net banking, whatever it may be, when you are making the payment, you will making the payment through the bank. That means that is bank will pay the money. That is why you credit the bank account. When you receive the checks, you deposit in the bank. Bank will collect the money. That means the client will receive the money. That is the receiver. So deposits will be debited to the bank, and all the they are called treated as withdrawals. When they are making payment to outsiders, you check whatever it may be. So it is just like we are taking the money from the bank. That is withdrawal. So we can call it as debiting the bank account is also called as it's called deposits. Checks are done. Check the bank. So sometimes we pay the money to contra, make the payment of money also in the bank. Okay. And whenever you are making the payments to the bank, it is called as withdrawal. So when if you take the bank account, so we will see, I will show you bank account, how you open the bank account. It can be opened in two ways. So discover display more reports, then account books, then if you take ledger, then you have to select the bank. So State Bank of India, we are selecting. Or instead of selecting the ledger, after display more reports, sorry, after display more reports, account book, instead of selecting ledger, the next after one is cash and bank book. If you select that, so this is the cash account, that is cash book, and this is the bank accounts. So what we have only one account. It is showing one account name, one bank and balance. If we have two banks, it will show two banks and the balance. We have only one. So we have 82,900. If you show month wise here, we can select. If you go and select here and select the bank, it will show the transactions of the latest month. Is only April. So if you make entries for June, it will show only all the June month entries. Show. So if you want any other period, that select like that. You see, 1 4 2. Is that it is only 2 months, 2 days. So 30th you cannot take education mode. So we will get the, and if you go to this way, in this way, if you select this one, it will show month is April, May, June, July. So directly we can select the month and enter, you will get the transactions from it. So here, whenever we are receiving the money, receipt means receiving checks or anyway, we are receiving money from our customers that will be deposited in the bank. They are called as deposits. All the receipts and also amount cash depositing in the bank, all these will be debited in the bank. So these are all called the debit side is all called as deposits. So we are depositing into the bank. That means if you deposit the check, cash, no problem. Depositing the checks, the bank will collect the money. That is why checks, all the deposits will be shown on the debit side. And when you are making the payments to others, that means you are taking the money. That means bank will pay to them. That means it is less like we are taking the money from the bank. They are called as withdrawals. That all will be credited in the bank. They show on the debit side. It's okay. Now, we are entering the transactions in bank account in our books. Similarly, in the bank will enter these transactions in our account in bank. Our account in the bank, they will enter, but they will implement ROG base. We are depositing in the bank. Bank is the receiver. We are debiting. To the bank, we are giving to them. So we are the giver. Their account will be credited. So similarly, when we sell the goods, we enter sales. The other person is purchasing. He will enter purchases. Similarly, here, when you debit the bank account will credit our account. Our account. If you credit the bank account will debit the debit the debit our account. So the debit side, we are calling all the debits as deposits. But in the case of bank, in our account, credits will be shown as deposits. We are calling as credits as withdrawals. So in the bank, debits they will show as withdrawals. So in the bank account, so bank account will be like this. Bank account will be like this. See, for example, we are depositing money in the bank. Contra depositing money. So bank account is debited because bank is the receiver. So cash is going out, bank is receiving. Bank account is debited. So when you are depositing the money in the bank account is debited. But the other person, bank will credit our account. You see, we go to the bank. So cash deposit, they credit our account. Okay. But in this case, we show as debit and credit only. But in the banks, the copy of our account they will give to us. Otherwise, we cannot go and sit in the bank and we cannot see whether all the entries are made or not. That is why what we do is the bank people every month they will give the copy of our account. It is called as the passbook or it is called as the statement of account. They will give the statement. In the statement is our account copy. So the debits and credits will be our debits and credits will be different. Our debits will be credit in the bank. Our credits will be debit in the bank. So in some cases, in some banks, these debit and credit as debit, credit. Sometimes they show as Debit means withdrawals because we are the receiver. Debit means so we are the receiver from the bank. So bank will debit account. Debits will be shown as withdrawals. Credit will be shown as drawings with that mean deposits. So they will show as debit or credit. Debit is shown as withdrawals from their point of view. For us, credit is the withdrawal. For bank, debit is the withdrawal. For us, debit is the deposits. The bank, credit is the deposits. Here show withdrawal deposits or debit credit. Okay. Now, what we will do is whenever we are making the entry, the books, that is whether debit or credit, where the check we are receiving, receipt means we are receiving check, deposit in the bank. By immediately we make the entry, we will make the entry in the bank account, that is, we will make the entry in our books. But for the same thing, the bank also has to make the entry in the opposite. We debit, they credit. But says in this case, so we are debiting the bank account and bank account in the bank, our account will be credited. If it is done, there is no difference. We are debiting his account and they are crediting our account. There will be no problem. But whatever it may be, deposits are withdrawals, whatever it. So the entry we will make immediately because deposits, withdrawals, all these will be done to us only. That is why we make the entry immediately. So depositing the checks in the bank, received from the customer, deposit in the immediately in the bank. So when I am depositing in the bank, we make the entry immediately in the bank. So if you, after making the entry, our balance will be affected immediately. But the bank has to credit these debits. So the bank will credit our account only when the checks deposited by us are collected. After collecting only, they will credit our account. So our account is affected if we are making the entry immediately, so our balance will change immediately. But the bank will credit only after collecting the money. That's why till they are collecting the money, our balance, that is the bank account balance in our book, our account balance in their book, that is the statement that the balances will be paid for rent because both are not making the entries at a time. That is why they have the difference. Similarly, when you make payments, that is withdrawal, so you will make the when you issue a check, immediately you make the entry for the you make the entry for the payment immediately. So our balance will be updated. But that is to be when we are crediting payment, that is withdrawal, bank has to debit our account, but our account will be debited only when the party, that is the when suppliers or anybody to whom we issued the check, only when they deposit in their bank and collect from our bank, that then only they will debit in my account. Till that time, both that account will not be affected in the bank, but in the books, our account is affected. Both make the entries at a time, there will be no difference. Otherwise, you make the entry immediately, but the bank is not making the entry immediately. Then, till they make the entry, that is the entry, the balance will not tally, balance will be paper red. This way. So, every day or every month, once in a month, or every day, if you take the bank statement and we compare the bank statement and our bank, that is bank statement is our account in the bank and bank account in our books, that is in our bank, then the balances will be paper red. So what are the reasons? You deposited the check, they are collected immediately, they will get it. So there will be no difference. Because why, what is the reasons for different entries? You debit the entries, the deposits, you debit immediately, they will not be credited in the bank till they are collected. That is why till they are collected, the balances will be different. After collecting, when they make the entry, then the difference will be completed. Then there will be no difference. And similarly, when we issue checks, we make the entry immediately, our balance will change. They will make the entry only after making the payment to the other service. Till then, there will be difference. So that is why the checks deposited, but till they are not clear. The checks issued, they are not encashed by the others. So because of them, there will be differences. Not only these, sometimes the bank will make direct payments on our instructions. They'll make the payment of insurance premium, payment of rent or anything. They'll pay directly till they will enter in their bank, in the account, in our account they will enter. But we don't know that. In our book, we will not enter. Okay. And similarly, checks are deposited, we make the entry immediately, but the bank will they credit our account only. The bank will credit our account only when the amount is collected. Suppose if the check is bounced, we don't know. So they will not make the entry. They will not make the entry, but we have already made entry. So because of the bouncing, they will not make the entry. Even if they make the entry already, they have reversed that. Then there will be difference of the balances. Similarly, any bank, suppose they are giving some interest to us, they will print our account, they will put in our account. That is receipt to us. Okay. So it is will be paid by them. That is why we have to debit our account in our books. In the bank, they will credit our account, the interest paid to us by the bank, and they will collect some banks. So check is deposited, dishonored or bounced. So that will be reversed. For the bouncing of the check, they will take some charges. So the bank charges, they will enter immediately. Immediately, they will debit our account. Or any other bank charges, they will collect, they will, for those checks, outstation checks, for collecting the check, they will take some charge. So like this, some bank charges, they will debit our account immediately. But we don't know that. So we will not credit our account. So there will be difference. Like this, there will be lot of difference. But what we have to do is, we have to take the statement and we have to compare the statement and our account, that is our books, then what are the differences? So the entries available books available in our books, they are not shown in the bank book. So entries, the debit or credit, entries made in the bank account in our books, but the entry is not made in the bank. So there will be difference. Sometimes the bank will make, suppose a customer, they directly paid into bank, they paid into net, they paid the cash in our account. So we don't know that, they have not informed us. So they will make the entry in the bank, we will not know. So in such case, direct transactions into the bank, they will be shown in the bank only, not available in the bank books statement, but not available in our book. In such a case, there will be difference. Okay, like this. So what we have to do is, so the entries available in our books, so they are not available in their means. What we cannot do, we cannot go to the bank, we cannot make entry. Till they make the entry, these differences will exist. We cannot do anything. Suppose if there are items in the bank, items some amount created in the created or debited in the bank, but not shown in our books. That we can make in our books. So all those entries we can make immediately by seeing the statement. We can make the entries. So because of them available in the bank, but not available in books, that can be completed, that can be closed because we can make the entry immediately. So there will be no difference for them. Only the entries available in our books, but not available in the bank books. That is, these are the entries only. Checks deposited, they are not collected by them. Checks issued, but they are not the other persons. They are not encashed from the bank. So these are the reasons, only reason due to the for the differences. The bank books available, the entries made in the bank directly, not available in our book, no problem. We can make the book entry in our book so that we can cancel the epic. Because if you make the entry in our available in the bank, available in the book, our book, so there will be no difference. These things we have to do. For this, we have to make a statement. So in our books, we have to have the entries, all these entries which are available in the bank also. So they will not have difference that we have to show. They're shown in the bank also, then there will be no difference. For us, we have to make the statement. So available in our books, whether available in the bank or not, it is available in the bank. So when the bank entered that is called as bank date or value date. Some banks call it as value date. Some banks call it as bank date. So what is the bank date? What is the transaction entered in our book? That is entered in the bank also. The date of the transaction entered in the bank. That is the date of entry is called as bank date. So if you put the bank date, it means available in our books, available in the bank also. Like that, we have these are dates, bank dates, and all the bank dates are given means both are entered when you entered in both the books. So the difference will go. And only those which are available in our bank, in our books, not available in the bank. So they cannot be entered in the bank. Oh yes, that is right. They will exist till the end. Because of them only, the difference exists. And some transactions directly entered in the bank, that no problem, we can enter in our accounts also now. Okay, like this, how to make the reconciliation statement. So we have to take the bank. See here, we can take in two ways. So go to ledger, take the bank account, or instead of ledger, go to cash or bank books. So take this one, enter the month. Okay. And now we have to make a reconciliation. Reconciliation means that is called as the reconciliation statement. What is the balance in our book after making all the adjustments? Because some entries are available in the bank that we will make in the our cash book also, in our book also. Then after making all the adjustments, what is the balance in our book and what is the balance in the bank book? That is the reason for this difference. Only this one entered in our books, available in our book, but not available in bank. Only those are the reasons. All other reasons will be closed. So that's why we have to do. So we have to give the bank date, entered, then all the entered bank date is available in both the book. Those will be closed. Only those which are available in our bank only, in our books only, not available in the bank. Our balance in our book, the reasons available in the bank in our books only, not available in the bank, and then what is the balance in the bank. So for that, what how to do is say actually take the bank account, then we have to see here on the right side, alt R side, click that, or click here in our keyboard, alt R. It will show what are the see how many transactions 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 on the credit side, deposits. See, 9 on the see deposit side means the debit means deposits. Take deposits, 9 transactions, that is the total amount. So go to the this is required. One deposit for us and deposit. Please deposit. In the bank statement, it is required. 1, 2, 3, 4, 5, 6, 7, 8. 8 are credits. So credits means withdrawals. So here we take alt R. So withdrawals are 8. Total 17 transactions. Total transactions 17. Out of the 17, this is 8 are withdrawals and deposits are 9. See here, this is the balance available. Total 17 transactions. This is the balance available, and these are the things. So here, these are the balance. Where we have balance withdrawals, see we predicted the withdrawals. No, we resign. In our book, see we created the withdrawals. We created the withdrawals. We created the withdrawals. That is why created means reduce. Debit balance. Created means reduce. So add back them. Add back. And debited means deposits. If debited means we increase the balance. So reduce now. So less deposits. If you take that, the net amount will be the balance of the bank. For example, so here 82,300 rupees plus 3 lakh 700 minus 4 lakh 80,000. 4 lakh 50. Nil balance. That means both are same. So take the adjustments, bank and both is value. Okay. Balance will be there. Because right now, balance will be there. Difference will be there. Because some transactions here, how the transaction will not be available in the bank. That is like, so the transactions available in the bank, that will enter there now. So our balance will get. But all these transactions, some transactions with the debit or credit, for example, they will not diverge with the bank. That's it, there will be some difference. So again, now again here, click here, click again. Again, alt of annual reconciliation. It can means reconciliation. Again, click. That means from the account, alt of, again alt of. So here, so in this case, it will show only the voucher type, then voucher number. So account number, check numbers, and all this will not show. In this one, you show all the details. So this one is available, this one is available, and that this is the instrument date. IST date is there. The entry. IST date means instrument means check PD. Instrument date is given. So this is the transaction date. This is the instrument date. Generally both will be same. Sometimes instrument date will be different. And instrument number, NEFT or RTGS or check number, and all these will be given here. Okay. And these three extra columns will be available. See, one, two, three, four columns in this way. See, one, two, three, four, that's the number, these are the columns. So addition to this, some extra columns will be there, deposit, and voucher number will not be there. Okay. So this will be there here. So all the items will be available in the bank or not. If they are available, okay. And if anything is available in the bank, but not available in the book, you have to make the entry now. You can make no entry. You can make entry, but available in the books, not available in the bank, you cannot make entry. See, so first we take a thousand. First one is debit. Debit means deposit. So the debit is entered in here, but in the bank it will be available that. Debit means deposit. So in the bank, deposit will be credit. So it will be available on the credit side. Go on, see here. See opening balance. See here. There is no opening balance. And here also. So here you see, go and see, there is no opening balance. There is no opening balance, and all the entries are there. So there is no opening balance. Yeah. So there is no opening balance. So we debited here. So it is created there. So available in both the books. When they created, here different dates are there, but you cannot make different dates. You cannot enter because of the mistake. So for these items, these transactions, we will do the bank data. See these transactions, we take them as April. For others, we take them as the bank date is, that is the amount deposit entered in the bank date as well, the same. Because here there are different dates, but we enter as per this because we cannot enter all the dates. So first of all, see here, it is available here. So yeah, 1 4, 1 4, 5. So it is available here. So because of this entry, this one, it means available in our books, and bank data also means given means bank also it is available. So the difference will go. Next one, second one is, see here it is debit. So it is debit. So on the debit side, it is, and then on the credit side, there is check issued payment. It is payment, check issued. So withdrawal means check issued. 20,000. Withdrawal check number is 111, 4 ones. So here debit, so it is debit and it is debit. The 1 2 4 ones. So it is also available. So this also 1 4. It is available. The next one is sometimes, yeah, the amounts will not be shown in the bank also in the same order because you just deposit check, it will be correct and some more, some of 2 days later. So before that, some entry will be there. Okay. On the whole, so on the, this is over to, next one is 10,000. Next one is 10,000 debit. That is deposited by customer B. It is deposit. Debit means deposit. This is the check number 874 521. Okay. On the debit side, so it will be on the credit side. Credit side 874 for right now. This is the deposit. So it is available. So 1 4. We will the same dates. Then again, after that, this is over. This is then it is withdrawal. Withdrawal means it is withdraw means it is showing as withdraw. Bank also it will show debit credit, then the deposit withdraw also deposit. That is showing debit is showing as deposit, it is showing as withdraw here in the statement. DRS, bank detail statement. But in the account, it will show only debit credit. Okay. Now this is over 25,000. 25,000. Yeah, it is not. So after that, 25,000 is available here. 12 number. So 12 number, they are 4. And then this is credit. That is, then deposit is there. This is the check is deposited, 11,000. Here debit side, here credit side. So 119,713. Okay, 713 is also available 1 4. 1 4 available. And then this 10,000 is completed already. This 10 is completed. And left we received money. That is credited, we have debited. Already we understood. No, because for the person paying the money, the customer might have informed us. So left we received. So we received by 60,000. We entered here and entered there also 1 4. So date 1 4 only. So this is over. Up to this 1 2 3 4 5. 1 2 3 4 5 6 are there. 1 2 3 4 5 6. This one. So 6 we completed. Next one. 13,000 rupees is credit one issued the check. That is, we issued the check withdrawal. So here, 13,100. So it is available 13 number. Check number 13. We issued the check, it is debited. So that is 1/4. You take 1/4 only. And then after this 13,100, there is one check issued 20,000. So it is not available to the agency. 20 because sometimes it will be entered in the bank after some time. But here it is, okay, that 20,000 is not available. That 20,000 and check number is 15. See, 14 is there and 14 out of then 15 is here. Okay, this is different. Sorry. This is not 15. 16, sorry. This is 16. The 16 is not available here. 16 and this is 15. Yeah, 15 is here. 15, 16. That 15 is this one. Next is available here. Okay. Now, this is over. And then, yeah. And then 13,100 and the 20,000 is not available. Next one is 44,000 rupees. Withdrawal means we should a check. So we should a check means here 44,600. So here after this 30,114 check number 114 to second date we take two. We take also 2 for 44,600 completed. It is completed and this nothing is not completed here. So 24,000, this 13,000 is completed. Then the gift we received 1 lakh. So we received 1 lakh. Correct bank statement. Credit means that is deposit for us. So we received that we received 1 lakh. So on the debit side, there is no 1 lakh. So remember this amount is not available. That 1 lakh is available. Okay. So on the debit side, this is credit. This is debit is already there. And here on the credit side, 1 lakh is not available. Okay. So now, so not available in the bank. So it is in the accounts where the debit on the debit side, it is not available. Suppose if you save this, all these entries will be hidden. They will hide it because they are already available in both the books. We are doing the date means bank date is available in the bank. These are all in the both the books. That is why those differences will vanish. That is why if you accept this statement now, so those will be closed and only the balance entry is secure. But here, now we have to make the entry. So for making the entry, closing this, going back, go to vouchers, we did not do all these things. Here, previously, the old releases, there was one option here. All to J, here, all to J, create voucher. All to J, create voucher. Now it is given. Instead of that, what we can do is, all to J we cannot do. All to J is, the state it will be as it is. We don't take that and it will be shown here. But yeah, altogether is not available. This is another thing. What we have to do is keep it as it is. Go to the go to page. You go to page. Create voucher. So now we are creating the voucher. These will be saved automatically. It will ask you. So create voucher. You do that. See, it is asking voucher. Okay. And the voucher, what is this one? Here, 1 lakh we received by net. From where we received? We don't know from where we received. Not from here, supplier is given. But here nothing is given. That is why we received the money. Bank account is to be debited. Bank account is to be debited. Received the money. Take F6. Take this 2, 4 only we will take up. 2, 4 we will take up. Cash account is debited. Bank account is to be sorry. This is deposit, no. Deposit means bank account is deposit means bank account is to be credited. Deposit is bank account is to be debited, and the party account is to be credited because receiving the money from party, so party account is stated, receiving in the bank account is to be debited. No, we don't know from where we receive. So we cannot debit the party account, credit the party account. So for that we have to create account, some suspense account, and after closing that, and we can inquire in the bank and we can see from where we receive, then we can make calculation. Okay. Now we create a account, suspense account. Suspense account. The group will be suspense account group is there. So suspense account. Suspense account, the group will be suspense account is it? Suspense account. So suspense account will create the suspense account will enter. So we are creating the 40 account we are creating 1 lakh and debiting the State Bank of India. Debiting the State Bank of India. So we received 2 NEFT. So place bar select NEFT means e-funds transfer and the entry here just NEFT. So we don't know the check number from where we received. We received by NEFT. So we enter that. Okay. Opportunity. So then go to videos, go back, escape, see. But 1 lakh. So this all previously, if you take all together, it will ask you to save this. So this will be saved and then you will get the entry income. And now with this 1 lakh is also on second. So on second this is there. So the entry we made available in the bank, not available in the book. We made the entry now. Like that we can make the entry. Okay. And then next one, 13,000 rupees is there. See here, 13,000 rupees. So first of all, we have first 13. See here on second. So we from customer we issued 13,000 rupees check. We debited the bank credited the account. But sometimes they will do like that. But the check is bounced. 13,000 rupees is credited by the bank. We debited in the bank. Debited in the bank account. But now it is bounced. So that is the bank credited there. Now we have to what we have to do? Bank has debited our account. So we have to credit the bank account. Only 13,000 rupees. This 13,000 rupees check number that is to be credited. Now again go to again create voucher. Now where you will enter the check bounce we have to enter in the journal same date Q4. So here the person from where we received we don't know from where we received 13,000 rupees from supplier 13,000 rupees check deposit. So from where we customer he I think this and customer he received or we can see the day book. We can see the day book here. Go to it. Day book. See the day book. You can know 13,000 rupees is received from it. So here, go and create the voucher. Create the voucher. And here, we receive the money. So receipt, we will write receipt entry. Receipt we made credit. What we did credit is we created that amount and now it is bounced. So take journal and now the person will become debtor to us. So from this is entered 13,000 rupees we entered that is 13,000 check deposit. The now it is to be credited. Made customer key and the amount is 13,000 rupees and then the on account because there will be no bill payment. So this one also there and this is also the check same check is bound. So here we come 365,400. The same check is bound and second. So this is over. Now come back. That's it. Yes, period. See here, this is also done. So here debited 13,000. Here this is not there. This is 13,000. So this 13,000 after 1 lakh, this 13,000 rupees done. 13,000 rupees Q4 we have debited. Now it is bound. We have to this credited. This credited. So after 1 lakh we have taken this mistake. So after that, after 1 lakh we made and then 13,000. We have to take 13,000. So 13,000 rupees. 1 lakh we paid. So not available in our book. We have the entry for 1 lakh. After 30,000 we have to take the 30,000 rupees all in there. So that is there. Now the 30 pounds further we made the entry. So debited here the same customer need. Our customer need become a debtor again. So this is over. And then here up to this we completed. And now after that, see here 30,000 completed. So 250,000 and 300 bank charges. This is bank charges or check return. Check return, they charge 250, and this is checkbook issue charges 300 rupees. These two are bank charges. Both check return or whatever the what may be, bank it is called as bank charges. There are 550 bank charges that is debited in our account. That is shown as withdrawal. We have to show a withdrawal on the picture. We have to make the entry for bank charges 550. So again, so it is available in the bank, but not available in our book. So we have to make the entry. We can make the entry immediately because from the bank we can see and make the entry. What is the entry? Bank charges means debited in the bank. We have to pay it because we have to pay to the bank. That is the bank charge. Okay, enter the payments. So debit bank charges. See bank charges. What is the amount? 250 plus 300. 550 bank charges. English State Bank of India. Here, it is not check. It is other transaction, not check or cash. It is other transaction. Here it is just we can. So it just debit because debited by the bank. Okay. So this is over. Then come back again. Come back. See, 250. So this is also made the entry. So this is there in the bank. We made the entry in the book. There will be both the books. We have taken the taken. Let's say they don't accept this. Okay. Accept means all these will disappear. Only others will appear. Okay. Over. Now relax. Then there is one amount, 1,125 cash deposit. So 1,000 rupees LIC premium. That is LIC premium is paid by the bank. It is shown on the debit side. It's right. So we have to show on the credit side LIC premium. So that means it is taken by the bank. There is a payment. We have to payment paid by the bank other by outside. So we have to show it as a payment. So go to again create voucher because whatever available in the bank, not available in our books, we have to make the entry now. So now it is payment entry on the same date. So we have to debit now. What is the debit? Bank is to be credited. Bank is debited. Bank account, the statement, bank account, our account is debited. So in our books, we have to debit the bank account. So what is the debit? The expenses we have to debit. What is the expense? LIC premium. But here, LIC premium is not the expense of the business. LIC premium is the expense of the owners. That is right. So when you pay the expenses for the owner, when you take it as the owner has taken money, client's account. So we have to take it, client's account, see normally, client's account is created. So in the client's account, 1,000 rupees. LIC premium paid to the paid for the owner. So here, it is paid by the bank and you haven't given any check. Paid by the bank, that is right. It is also not check. Take other transaction. Here also we have to take it directly debited by the bank. Okay. Over. Then escape, escape. So the statement will be there. From here we are going there. We will come back. And this is also available. So they are available and enter here also. Here also we enter. Okay. So this is over. Then cash deposit 25,000. So we deposited cash 25,000. Come down here. Deposit into bank means bank account is debited. Bank account is debited. So deposit. Available 25,000 is created in the statement, credit 25,000, debit here. So, is available. And then withdrawal is there. Withdrawal for withdrawal, you have to issue check and take 100,000, 115 is the withdrawal check. So, debited, you have to, we are withdrawing the money is credit. So, 115 check number 24. So, okay, 24. And then after the withdrawal, there is one left to pay. This is bank account is debited in the bank. In the bank, it is debited. You have to credit. We made left payment of 50,000. See, 50,000. We made to left payment to supplier C. We made the left payment of 50,000 to 4. So these are all available. And then 2 lakhs 50,000 paid and everything is completed. See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, both keep mixed. 12, 13, 14. 14 entries are there. 1, 2, 3, 4, and then, so here, Here there is one thing. So here in the bank, so whatever is available in the bank, not available in the books, we made the entries now. Whatever available in our book, in the bank account, not available in the bank, they are left over receipt. We made a payment, so we issued a check, but that other person, they have not deposited in their bank, they have not collected bank amount from the bank. And then, see, this is from there, we received some amount, so 12,000 rupees, we received, deposited in the bank. We don't know the check numbers. Here we are not entered the check numbers issued from them. We don't know. I have taken 1,122. So there is 12,000 rupees debited, deposited in the bank. They are not available on the indeed side of the passbook. That is, and 30,000, it is also not available. And then 15,000 rupees, 15,000 rupees, it is also not available. And 20,000 rupees, and 15,000 rupees we deposited. This is deposit, this is deposit, this is deposit. And this is withdrawal 117, 25,000 cash, 20,000. This is 25,000 rupees. Yeah, 25,000. This one. This one is the deposit. This is the bank deposit. That is that is completed. That is over. And after that, these two are completed. But these two plus one. These are not available. And check deposited also 15,000 is not available. That's all. So all others. That's all. So these are not available in the bank. Available in the books only. So 25,000, 20,000 credit means debit, there is no 20,000. Okay. And that's over. And 12,000, 13,000 on the debit credit side. There is no 13,000 is there. So 13,000, not 13, 15. So 12,000 and 30,000. So it's not available. And 25,000 on the credit, our credit is debit side. 25,000 is not there. And then 15,000 on the debit. There is no 15,000 on the credit. Okay. So all these are there. So these checks are not dates we entered bank date. Only those are available in both the books. Some are not available in our book, but available in bank. For that, we made entry now. So in our books, we make entry. That is it. So they are available in both the books. Okay. Now we complete and then accept this, accept. So this is over. So there are only, there are, so only, see here, in this side, three checks this side, three checks this side, and two checks in this side. These are not available in the, oh, sorry. This to do first April, that is first April, and this is second. The instrument date, April, to second April, okay. And these checks are not reconciled now because they are not entered in the bank. Now we entered, but they are not available in the bank. And now we go and see here. So here, 5 checks are not available. 2 deposits, 3 deposits, or 2 withdrawals. 2 deposits done. 2 withdrawals and 3 deposits. They are available in our books, but they are not available in the bank. They are not available in the bank. That is right. Now we come down and we come back. So here, our all the details will be there. See here, all the details will be there. See, after that. So in our books, after we made some measures, that is some entries we made out from the cash, from the bank statement. 167,750 is the balance in our account because we made some entries now. Now if you go to our, so here, so 167 available. These five ones are not available. Then again, all are free. So these are the thing. So 167, see, 167, 750 is the balance in our bank. That is in our book, that is the balance. So these three are in the bank. So they are not available in the bank. This is called as deposit. So these deposits, these withdrawals are not available. So after the adjustment of that, this is the amount that is the balance in the bank book. That is in the statement. See, in the statement, the balance is 1,55,750. So 1,55,750. How it is? So here, this is the, yeah. Say 1,67,750 is the balance in our bank. So these are the deposits. So deposit is added. After adding that, this is the balance. So minus the deposits, 57,000 minus the deposits, 167, 750 minus the deposit 57,000. So minus that plus these are the withdrawals we have shown. But withdrawal is reduced. So now we add that. So 45,000 rupees the deposits. Total is 1,55,000. In our books, this is the balance. So this balance is after our deposits. Reduce and we enter the payments. So add the payments. So payments means reduce in our book, add back them. And the deposits means we added them. So now reduce. That will be the balance the past book. Okay. Now the balance in the past book is 1,55,750. If we go back, our account will be showing as it is. Our balance only will show. And it is only it will show only 5 transactions. 5 transactions are available in the cash book only. Not available in the bank and not available in the cash. Bank transactions available in bank, not available in our book. That will be entered now. So there will be no problem. So now available in our bank, that is in our books, not available in bank. Only these are the reasons for the paper. So 5 are there. Out of the 5, 3 deposits, 2 withdrawals, they are not entered in the bank. Okay. Now if you take them, that is the thing. So if you take them, this one again, click R. So here is the balance as per books, our company books, and the that is available only in the books. These are available in our books only. These are available in the books only. So if you make this one minus this one minus this one, plus this one. Deposits reduced, added, withdrawals reduced. Now add. Now this is that is the expected bank balance on 30th April to be taken for 1 month. 30th April to be expected because if one check is cleared, so that will be taken. That will be updated. And another one is cleared, that will be updated. And the other payment is cleared. That so whatever one the transaction, whatever transaction is cleared, that will be the balance will be updated with that. That is the expected balance. This one, we make the bank next in the next period after second. In the next period, bank cleared these checks, so there will be the difference will go and cleared these checks also. The difference will go inside. Then both the bits will show the same. So these are cleared and these are cleared. Then both the bits will show the same balances because of 3 plus 2 5. Because of this crime only, the balance is different. This is called the bank reconciliation statement. Okay. And now, if you see this, if you come back, you go here, directly we come to data of tally, come to banking. So here, if you see banking activities, if you take, there are 5. So available only, see, 5 transactions now available only in books. Available in only bank nothing. There only 5 are available in which one these two, the same two. So these are available. And then if you take check register, if you go there, see 2 unreconciled, 6 reconciled, total 8 completely reconciled total check. Okay. So this is the bank reconciliation statement. So go through this one. You work out on your own, see the problem, and I will send the statement also. The bank statement I will send. I will put in the description. And the transactions you see by book, you see whatever I am doing now. See what I showed. So DA and see this, and you can make it. Okay. Before that, before making the entries, you see that in the beginning, the video, in the beginning of see the statement. So all these entries you make in your book, in your bank account, you make them, and this compare this and work out. Okay. So this is the bank account statement. and we will meet in the next video with another important flag. And one more thing is, there is one thing is, what we call the long time back I did, again now I am going to do payroll management, very, very important. Okay, with that, I take this. All the best.